I see the biggest revision we've had. I go back 25 years here. This may be the biggest revision ever, Sarah. We minus 911,000 payroll growth from April of 2024 through March of 2025 is 911,000 less than previously reported. What has happened now to the month over month, or the monthly growth rate, has gone from what we thought was 147,000 a month to now just 70,000 a month. So 1.7 million jobs is now 847,000 jobs created over that period. So over that time period, payrolls were quite a bit weaker. Remember, this is the period ending 5 months ago. This is the annual benchmark revisions that's done every year. This is a preliminary number. Over time, it tends to actually be revised a little bit higher. The revision to the revision ends up being a little bit higher, but right now it's suggesting much weaker payroll growth. I will point out that this is definitely toward the high side of what I've seen from Wall Street analysts. And now you have to plug in you have to start thinking about, what does this say about today? In other words, this data is 5 months old. We won't know until the final revisions in February which month each of the weakness belongs to, but we do know a bit about which industries it belongs to. And we have a chart here, 880,000 from the private sector. The biggest revision came from trade, transportation, and utilities of 226,000, 126,000 off in retail, leisure and hospitality down 176,000, professional business services down 158,000. So widespread in the, I don't see it here. Not a lot in private education and health services, which was a big, you can see the recent revisions there. The second biggest revision that I have, Sarah, in my records is 2009 in the wake of the great financial crisis. And what had happened in that situation was some of the modeling was wrong. Some of the birth, death of businesses was wrong. This may be the case right now. We might have come into this year with much more weakness than we thought we had in the job market. It was okay. It seemed to be like the unemployment rate remained relatively stable. So whatever we were doing was okay to keep the unemployment rate, a separate survey, relatively low, but we were not creating as many jobs as we thought.